You keep telling yourself the same story. If I just find the right strategy, everything will click. So you search. New indicator, new mentor, new YouTube video, new backtest, new system. For a few days, you feel hopeful. This is it. This one looks clean. This one makes sense. You follow it strictly until the first loss. Then doubt enters. Maybe the settings are wrong. Maybe the time frame is wrong. Maybe this pair doesn't work. And just like that, you abandon it. Not because it failed, because you couldn't tolerate discomfort. Let's say something uncomfortable. If I gave you a strategy with a proven 60% win rate and you still had to take 4 losses in a row, would you survive it? Or would you modify it after loss number 3? That's the real test. Because the problem isn't edge, it's endurance. You don't have a strategy problem, you have a discipline problem, a consistency problem, an identity problem. Because discipline means you follow rules when you don't feel like it. You wait when nothing is happening. You stop when you want revenge. You accept loss without emotional negotiation. And most traders don't fail because they lack intelligence. They fail because they lack emotional stability. Here's what strategy hopping really is. It's emotional escape. You take losses. Instead of asking, did I execute correctly, you ask, is this strategy broken? Switching systems feels productive, but it's avoidance. Avoidance of responsibility. Avoidance of patience. Avoidance of mastery. Think about this. A professional athlete doesn't change their technique after one bad game. A surgeon doesn't switch procedures after one complication. A pilot doesn't invent new rules mid-flight. But traders? One red day and the whole system gets replaced. That's not optimization, that's instability. You don't need 10 strategies. You need one strategy executed 100 times with discipline. Because consistency compounds, randomness doesn't. There is something addictive about new systems. New indicators give you dopamine. New backtests give you hope. New rules make you feel like you're progressing. But real growth is boring. It's repetition. It's data collection. It's reviewing the same mistakes until they disappear. And boring doesn't excite the ego. Let's be honest. Sometimes you don't change strategy because it failed. You change it because you're tired of losing. You're tired of feeling wrong. You're tired of uncertainty. So you look for something that promises comfort. But trading never promises comfort. It promises probability. And probability includes pain. Discipline is choosing long-term consistency over short-term emotion. It's closing the platform after max loss, even when you see another setup. It's reducing size after a rough week, even when you want to make it back. It's doing nothing when nothing is there. That's power. The disciplined trader understands something crucial. A strategy doesn't fail after 3 losses. It fails after statistical breakdown over time. But emotional traders don't wait for data. They react to feelings, and feelings are terrible analysts. Imagine this. 2 traders use the same exact system, same rules, same risk, same market. One follows it strictly for 6 months. The other modifies it every 2 weeks. Who do you think becomes consistent? Edge without discipline is useless, but discipline can make even a simple edge profitable. Here's a harsh truth. If you cannot follow basic rules with a simple strategy, you will sabotage any complex one. Because complexity hides inconsistency, simplicity exposes it, and exposure is uncomfortable. You say you want to be a 1% trader. The 1% don't chase systems, they refine execution. They track metrics, they measure rule adherence. They treat trading like a business, not a casino, not a hobby, not an emotional outlet. Ask yourself something real. How many strategies have you tried in the last year? How many did you give at least 100 trades? How many did you follow without modification? If the answer is uncomfortable, that's your answer. Your problem isn't knowledge, it's trust. Trust in your system, trust in probability, trust in delayed gratification, and most importantly, trust in yourself to follow through. There will always be another strategy, another holy grail, another perfect looking back test, but none of them will save you until you stop escaping discomfort, until you stop negotiating with rules, until you blame the system for emotional reactions. The market doesn't reward creativity under pressure. It rewards consistency under pressure, and consistency is built through discipline. Not excitement, not inspiration, discipline. Right now, there's a choice. You can keep searching, keep switching, keep restarting the cycle. Or you can commit. One system, one risk model, one execution standard, for long enough to see truth. Because the moment you stop changing strategies is the moment you're forced to face yourself. And that's where real growth begins.
Because discipline is not about being strict. It's about being predictable. And predictability creates profitability. Right now, your results fluctuate because you fluctuate. One week you're focused, next week you're emotional. One day you respect risk, next day you double it. One session you wait patiently, next session you force trades out of boredom. Your equity curve mirrors your internal state. Unstable mind, unstable results. Let's talk about something subtle. You don't break discipline when things are easy. You break discipline when pressure rises. After 2 losses, after a missed move, after a big win, after a slow week, pressure exposes identity, and identity determines behavior. You say, "I'll be disciplined tomorrow." But discipline is not a mood, it's a standard. Standards don't change based on emotion. If your rules change depending on how you feel, they're not rules, they're suggestions, and suggestions collapse under stress. Here's the truth most traders avoid. You don't actually want discipline, you want comfort. Discipline is uncomfortable. It requires stopping when you want to continue, waiting when you want action, accepting loss without emotional reaction, reducing size when ego wants to increase it. That's not exciting, but that's powerful. You think the 1% trader feels different? No, he feels the same fear, the same frustration, the same urge to click again. The difference? He doesn't obey it. That's it. Self-control under pressure. There's something dangerous about small rule breaks. You move your stop just this once. You enter slightly early just this time. You take one extra trade just today. Each small compromise weakens your internal authority, and when your mind realizes rules are flexible, it stops respecting them. Consistency dies slowly, not dramatically. Discipline builds self-trust, and self-trust builds confidence. Not winning streaks, not big months. Keeping promises to yourself, that's the real currency. Imagine finishing a red day, but every single trade followed your rules. Risk respected, entries valid, exits planned. Would you feel defeated or quietly proud? That quiet pride is the foundation of long-term growth, because now your confidence isn't attached to outcome, it's attached to behavior, and behavior is controllable. Let's destroy another illusion. You think more screen time equals more profit. It doesn't. More screen time often equals more temptation. The disciplined trader doesn't stare at charts all day. He knows when his edge appears, he executes, he leaves. No obsession, no emotional attachment. Strategy hopping is easy. Execution refinement is hard, because refinement forces you to look at mistakes, to journal honestly, to track emotional triggers, to admit that sometimes the problem is you. And that level of responsibility is heavy, but it's also freeing. If your strategy has positive expectancy, your only job is protection. Protect capital, protect consistency, protect emotional neutrality. That's it. But protection feels passive, and ego prefers action. So you sabotage stability in search of stimulation. There's a version of you that loves drama. Big wins, big losses, big stories. But professionals don't build dramatic equity curves. They build smooth ones. And smooth feels boring. Until you realize smooth equals scalable. Discipline is the bridge between knowing and becoming. You already know not to overtrade. You already know not to revenge trade. You already know to respect risk. So why don't you always do it? Because knowledge doesn't override impulse. Identity does. The moment you define yourself as, I am a disciplined operator, everything changes. Because now breaking rules isn't just a mistake, it's a violation of identity. And identity is powerful. Let's be honest. If someone watched every trade you took for a month, would they describe you as disciplined or emotional, structured or reactive, professional or impulsive? Your habits answer louder than your goals. You don't need a better system. You need fewer emotional decisions. Reduce decisions, increase structure. Fixed risk, fixed setups, fixed rules. Less freedom under pressure, more freedom long-term. One day, you'll realize something simple. The strategy was never the bottleneck. Your behavior was. And once behavior stabilizes, performance follows. Not instantly, but inevitably. Right now, you're either building a professional habit or reinforcing a destructive one. Every click matters. Every stop respected matters. Every moment you choose patience matters, because small disciplined actions compound, just like small undisciplined ones do. The market isn't waiting for you.
You don't sabotage because you lack knowledge. You sabotage because discipline threatens your ego. Think about it. If you commit to one strategy for 6 months, no switching, no modifying, no emotional exits, then there are only 2 outcomes. Either it works or it doesn't. And if it doesn't, you can't blame inconsistency. You can't blame timing. You can't blame execution. You'd have to accept reality. And reality removes excuses. That's scary, because as long as you keep switching strategies, hope stays alive. Maybe the next one will be perfect. But hope is not a trading plan. Data is. Discipline forces truth. Undisciplined trading protects illusion. Illusion feels safer than truth, because truth demands adjustment. Adjustment demands humility, and humility crushes ego. Let's talk about why traders secretly avoid full discipline. Full discipline means you accept all losses that come with your edge. No emotional interference, no escape. You take the drawdown, you log it, you continue. That requires emotional maturity most people never train. You want growth? Then you must become predictable under pressure. If I watched you trade during a 3-loss streak, a missed breakout, a big winning day, a slow session, your behavior should look the same. Calm, measured, rule-based. If your personality changes with the market, you are still reactive. Professionals don't react, they execute. There's something powerful about boring consistency. No big revenge days, no impulsive size increases, no emotional exits. Just clean execution, day after day, week after week, month after month. It doesn't feel exciting, but it builds something stronger than excitement: stability. And stability is scalable. You think you need motivation. You don't. Motivation fades the moment pressure rises. You need systems that protect you from yourself. Daily max loss, trade limit, fixed risk, pre-written checklist. When rules are mechanical, emotion has less room to interfere. Here's a hard question. If I removed your ability to change strategy for 1 year, would you feel trapped or relieved? If you'd feel trapped, you're addicted to searching. If you'd feel relieved, you're ready to build. Discipline is not about restriction, it's about liberation. When you remove emotional decision-making, your mind becomes quieter. When your mind is quieter, your execution becomes cleaner. When execution becomes cleaner, results become clearer. Clarity reduces anxiety, and anxiety is what fuels impulsive behavior. You say you want to be a 1% trader. Then understand this: the 1% are not creative under stress.
They are consistent under stress. They don't outperform because they're smarter. They outperform because they don't self-destruct. That's the difference. There will be a moment in your journey, a simple one. You'll take a loss, and you won't feel the urge to modify anything. You'll just log it and move on. No frustration, no doubt, no system changes. That's when you've crossed the line, from emotional trader to disciplined operator. Right now, your growth is waiting on one decision. Commit. Not emotionally, structurally. Pick your system, define your risk, define your rules, and give it enough trades to reveal truth. Because until you do that, you will never know if your strategy failed or your discipline did. And here's the final truth. Most traders don't fail because the market beats them. They fail because they abandon themselves. They promise structure, then break it. They promise patience, then rush it. They promise consistency, then negotiate it. The market didn't destroy them. Inconsistency did. If you want to change your results, stop searching for better entries. Start building stronger standards. Because once your behavior becomes stable, your results will follow. Not because of magic, but because probability finally has room to work. And probability only works when you do.
Now, let's close this properly. Because this is where transformation either happens, or this just becomes another video you nod to and ignore. You don't need another breakthrough moment. You need repetition. Boring, structured, disciplined repetition. The kind that doesn't feel heroic. The kind nobody applauds. The kind that builds quiet confidence. There is a version of you that wants intensity. Big flips, big days, big recovery trades, big emotional swings. And there is a version of you that wants stability, measured risk, controlled execution, calm exits, steady growth. You cannot feed both. One grows, one dies. Every trading day is a vote. Right now, you think the hardest part is finding edge. It's not. The hardest part is doing the same thing correctly, even when you're bored, even when you're down, even when you're up, even when you doubt it. That's discipline. Not emotion-driven effort, but standard-driven action. You want to know the real flex in trading? It's not a big profit screenshot. It's closing the platform after hitting max loss. It's watching a move run without you and doing nothing. It's ending the week red and not changing anything. That is psychological strength, and psychological strength compounds. If you zoom out, this is simple. A profitable strategy plus inconsistent execution equals chaos. An average strategy plus elite execution equals growth. Execution is leverage, and most traders ignore it because it's not exciting. You don't rise to the level of your goals, you fall to the level of your systems. So what are your systems? Do you have a fixed daily loss limit, a maximum number of trades, a written checklist, a review process, a scaling rule? Or do you trade based on feeling? Be honest, because honesty is the foundation of improvement. There's a quiet shift that happens when discipline locks in. The market becomes less emotional. Candles stop feeling personal. Losses stop feeling like attacks. Wins stop feeling like validation. Everything becomes data, and data is neutral. When trading becomes neutral, performance stabilizes. Let's remove the fantasy. There is no system that removes drawdown. There is no indicator that removes uncertainty. There is no mentor that removes emotional responsibility. At some point, it's you and your standards. You say you want to manage 6 figures, then show me you can manage 1% risk consistently. You say you want financial freedom, then show me you can control one impulsive click. Big outcomes require small discipline,
and small discipline practiced daily becomes identity. The trader who wins long-term is not the most aggressive, not the most confident, not the most analytical. It's the one who doesn't break under pressure, because survival precedes scaling, and discipline ensures survival. Here's the final realization. Strategy is external. Discipline is internal. You can download strategy. You must build discipline. And what you build internally, no market condition can take from you. So the next time you feel the urge to switch systems, pause. Ask yourself, am I improving my edge or escaping discomfort? That one question can save your account. You don't need a new strategy. You need fewer emotional decisions. You need stronger rules. You need higher standards. You need identity alignment. And when those align, consistency stops being hard. It becomes automatic. The 1% trader is not magical. He simply stopped negotiating with himself. Rules are rules. Risk is fixed. Execution is clean. Emotion is observed, not obeyed. And that's it. That's the secret. Now, the real question isn't which strategy should I use? It's, am I disciplined enough to execute the one I have? Because until that answer is yes, nothing changes. And once it is, everything does. Then let this be the final layer. No hype, no drama, just truth. One day you'll look back and realize the strategy was never the obstacle. The market was never the enemy. Volatility was never the problem. You were fighting something invisible. Your need to interfere, your need to control outcomes, your need to feel certain in an uncertain game. And that need was costing you everything. Discipline is not sexy. It doesn't create adrenaline. It doesn't create dramatic stories. It creates something better: stability. And stability is what allows money to stay. Anyone can have a big day. Very few can protect a good month. Very few can survive a bad one without self-destructing. That's the separator. Here's what changes when you truly become disciplined. You stop checking P&L every 5 minutes. You stop feeling personally attacked by losses. You stop chasing missed moves. You increase size to feel something. You trade, you log, you close, you live. Trading becomes part of your life, not your emotional identity. The moment you stop needing trading to validate you, you become dangerous. Because now you're not trading to feel smart, not trading to feel superior, not trading to prove anything. You're trading to execute a statistical edge. That's it. Clean, cold, professional. There is peace in that level of maturity. Losses feel normal. Wins feel normal. Waiting feels normal. Nothing shakes you. And when nothing shakes you, probability finally has space to work. Most traders quit right before this stage, because the stage before stability feels boring, and boring feels like stagnation. But it's not stagnation. It's refinement. It's identity restructuring. It's ego dying quietly. And ego fights hard before it fades. If you commit today, truly commit, to one system, one risk model, one execution standard, for long enough to gather real data, you will discover something powerful. The market was never inconsistent. You were. And once you remove inconsistency from yourself, your results stop swinging wildly. They start smoothing, slowly, steadily, inevitably. The 1% trader is not someone who never feels fear. It's someone who doesn't let fear vote. Not someone who never feels greed. Someone who doesn't let greed decide. Not someone who never doubts. Someone who executes anyway. That's discipline. So here's the final question. When the next loss comes, when the next missed trade happens, when boredom whispers, When ego pushes, who will you be? The one who reacts or the one who executes? Because at this level, it's no longer about strategy, it's about standards. And the market will always respect standards. The only question left is whether you will.